Hey guys, welcome back. Happy Tuesday to you. It's March 15th. We're going to talk about the SPY. 2% move today. Some Gamestop, there's volatility. It's up 10% today at one point. Sub up, like up, comment down. Happy money sticks around. We've got a Twitter you can follow us on at HappyMoneyYT, as well as a Discord server. Link for that is in the description. Free to join on there. Ryan Cohen tweeted, "Short sellers are the dumb stormtroopers of the investing galaxy." This is the first time he's getting more direct and more aggressive. Kind of starting with BBBY and his position on that, and his tweeting after that. And yeah, so that seems good. It seems bullish. Seems like he's getting into a position where he can he has some sort of leverage or power, or hopefully foresight to see that his company is in the end game of cleansing it of all the corruption, or hopefully that's what I'm reading into it, at least. SPY today, pretty epic bounce, 2%. Powell talks tomorrow on rate hikes. The market, I think, is pricing in more than what what is it? It's quarter. I think it's pricing in a half point, because the yield curve, basically, I was looking at it earlier, and it looks like a lot of this move is pricing in more than a quarter. So if we get just a 1/4% tomorrow, or a 1/4 point, we could rally. As always, bearish news can oftentimes, or seemingly bearish news can oftentimes cause a rally if it was priced in even more bearish. But maybe we're getting all of it equaled out right here with this 2% move, so it'll just be flat. We'll see. Powell does like to shake up the market maker himself, Jerome Powell. GameStop, pretty epic bounce here out of the low yesterday. Way oversold in the hourly. That's why I picked up those call debit spreads yesterday. I was a little early on them. I picked some up here, and then I picked a couple more up here. Those ones I picked up there were up like 100% or so, and I closed out somewhere around here. Made a little bit, not a whole lot though. The spreads on the options are ridiculous, and especially on the non-monthly, it's just crazy spreads. And I'm also doing multi-leg options, debit spreads. So spreads on spreads, it's just a lot of slippage. Get in and out of the trade, you're paying big buco bucks. So that didn't work out too well, but the idea was right. Looks like we've kind of starting to rally back up here coming into close. We got 40 minutes left. And my plan was, once we turn bullish on the hourly, but I'm thinking that's maybe a little too short of a time frame. Maybe 4 hours, what I should aim for. Because hourly bullishness can really just be a slowdown in the downturn. And I think today, subtract earnings, basically the price action we get from earnings, which could be flat, could be up, could be down, we don't know. If we're not looking at that, this looks like we had our pitch and we're on our downtrend. And I'd put our next floor at 40, 45-ish, which would basically be the next trough, next support. So that being said, of course, from the earnings we could start a short squeeze. But yeah, if you just look at this price action, today is I think just kind of a bounce from this big down 16% we had yesterday. Kind of like here, big down day, little up day. Tomorrow might be a little bit more up. And then Wednesday, flat. I'm expecting shorting after earnings, unless if there's big news. Or if there is a rally. If it seems controlled, we're not going to squeeze. It's just going to be a little rally and then probably continue on down. So I see today kind of like this day, or even back here more appropriately. So, we had big down days and a bounce. But the trend continued. So I'm going to probably open up some bearish plays either tomorrow or Wednesday, depending on how long this bounce lasts. So on the hourly, we're actually flipping back up. So this could probably go on until tomorrow, coming into earnings. If you look back on that day I just mentioned, the hourly, so you look on like here, that was 12.6, which was kind of just a recovery bounce from a big drop. It was bullish, kind of flat for about 2 days. It flipped bullish on the hourly. That's 12.6, 12.7, and then just made a ledge and then continued down. So I'll probably look to tomorrow or the next day to open up some bearish plays to cover earnings. Maybe a week or two of time. Probably at least 2 weeks of time. If GME is going to make a big down move, I want exposure to it. A lot of exposure, because got a lot of up exposure and it's not doing well. So I'm covered for earnings though, if it is bullish. That said, we still have our short puts on the margin account, and those I'm writing. I'll close those. I'll close those just before earnings. So Thursday I'll close those. Buy to close them. I'm assuming I will make a little bit on them because I don't think we'll be. I think we'll be above 83, and my lower strike one is 8, or my higher strike one is 83. Just based on the hourly chart here and this price action, I think we'll kind of keep grinding up a little bit next couple days. And then I'll have basically margin to buy shares in extended hours on Thursday if it starts ripping. So yeah, and then yeah, we'll just see how it goes from there. Other than that, if it's if Friday doesn't just basically start squeezing or pre-market, then I will probably be looking for bearish positions. Because that'll be the best time if we even have a little bounce to open something up for another trend to the downside. And I'll be riding a lot of my shares down though. I'll reopen covered calls also on the 2 theta accounts. This is one of them. Got 100 shares on here, and then on our TD Ameritrade I've got 100 shares, and then the leap I can do covered calls on. However, that leap is so far it's out of the money now. It's 120, so I have to sell calls above 120, which not much premium up there. Anyways, we'll figure that out. Just wanted to show you guys. I didn't have time to mention yesterday's video, but basically why I've gone back and forth and why I've thought this was probably the actual cycle right here, and this was the trough. I've shown different reasons why, but one thing that I found was the timing. So the move, first of all, from bottom of the, say there, bottom of the trough to the top of, that's not the top, bottom of the trough. I'm pretty novice trading view guy. To the top was 53%. Bottom of the trough to the top of the cycle, 53% on that. And then if you look at this one back here, 52%. So 52.87, just about exactly the same. And really, realistically, that was BBBY. That was when they did a share buyback and all that. So really, this is probably closer. That was 50%. We'll even say the bottom of this trough, even though this is the first test, which we were doing with the second one. And we'll do it even to the second peak, which was 60%. So that's one reason I think this was most likely the cycle still. The big reason, though, is that we broke through that support. Both of these times we had a higher support. That, or of course, we're basically just out of this cycle, and the cycles they've ceased, which would be good too. That's them posturing and positioning to start covering, and it could be because the stock gets cheaper and cheaper. Their positions get more and more valuable, or basically their losses get less and less, so it's a good time to cover. As well as the longs, it gets cheaper and cheaper for us to buy and wanting to go long. So there's going to be a spot in there where they'll get squeezed. So maybe it's not at 80. I don't know. Maybe it's at 40. It definitely feels like there's some buying pressure coming down here, though. This volume we had yesterday was big, and then even today's volume was big. So that's what we want to see. Another thing I see was just the timing. So that actually, what was it that I was looking at? I was looking at this before. 28 days from the support to when it broke that support. I think this was one of the ones I was looking at. Yeah, look at that. 28 days, 29 days right there. So the timing even on it's the same. This was kind of this would have been the first test, little peak of the trough, the second test. And then we had our cycle pinch, and then 28 days later, we're breaking that support. That was from here to there. Let's look at this one. This one actually never broke that support. And that's because since here, everything's changed since they broke through that support. So don't really have a good one on here, but there's what 28 days looks like. right about there. So timing and then percentage of moves, I think this was probably it. They were kind of slowly starting to get smaller as well. So yeah, not to say that anything else has changed for me, but I wanted to show you guys that just so you can position yourself right for some money making on the downside, however it is with covered calls or long puts or put debit spreads or call credit spreads. I might do some call credit spreads on the way down if I have enough capital. But hopefully we have a squeeze from earnings. If not a squeeze, hopefully we get just a nice little push back up to 120. At least for me, I'd like that because I have a lot of exposure, and 120 would help me recoup some of that. We could get around there by Friday, or even next week. That would be legit. Astra had a launch today. It was successful. Stock moved around, halted on the upside, the downside. What did we do? I averaged down on some 160 calls today. The volume today was good. We were starting to rip. I averaged down in the morning. So we'll see. They're so cheap. I was down like 98%. It's so cheap. I'm like, I need to get a few more of these. 6, 1. Oh, I closed out of these. Those spreads opened up yesterday. Made a little bit. UUP opened up puts. This is a slow mover. This is the dollar, basically the dollar index. And oil is going to potentially start being traded in the yuan from Russia. And that's kind of a huge unprecedented thing since it's always been traded in the US dollar. The dollar didn't react itself, but I'm wondering if we're going to see a reaction from that. And that would basically, the value of the currency would drop. So I only got a month of time, which probably is enough time because this, of course, is a very slow mover. But I got 24, let's see what I get, 25 puts for a month of time. So it would be a quick move. But that said, this was a quick move to the upside. This was just less than a month ago. So we'll see. And then I bought a Tesla put. Oh, I averaged into my Tesla put, I guess. That filled. Nice. So in case, this is kind of just, I still see basically a crash coming. So Tesla's probably the most overvalued, still the highest PE, one of the highest PEs that has good liquid options. And so I got 400. It's way out of the money, but that, you know, if it starts having big down moves, that'll come up in value quite a bit. Doesn't have to be in the money. And I got that for April 14th. So I have 2 of those now. Tesla kind of keeps running up a little bit. I might just slowly average into this bearish play. Always on the big down days, I'm like, I'm at all my bearish plays already. So this is my other one, the debit spread, the put debit spread. We'll see how that one works out. So Tesla, UUP, GME, those are the only ones I did today. And then on the margin account, here's how this is shaking out. Let me refresh that really quick. Basically, I shorted the puts, I sold the puts, and GME dropped like 10% from when I did that. So the puts went up in value, so my position went down in value. So the 83 put, we were down like 200% yesterday. Now it's down 37%, $1,500 down. What I need for this play to work is GME to be above $83 by end of Friday. So we'll see as time decays on this, and as it slowly grinds up, this should lose value, and then I could buy to close it. Trying to buy to close this again before earnings on Thursday, and trying to do that at a profitable amount, but we'll see. My 70 puts, so I opened up that one much later after GME came out a lot more, so this one's much closer to being profitable. And where GME is right now is totally fine. If we trade sideways or even come down to $71, I'm fine as long as it's above $70 by Friday. We'll get max gain on here, which was $194 credit. This one's $1,100 credit, but this was a roll down. I rolled this down from a 93 put, so I was able to roll down $10 and still receive credit. If this is going to expire in the money and I still have it, it's possible I'll just roll it down. So come Thursday before earnings, because earnings are after hours Thursday, I might just roll it down that day. I'm not sure yet though. If I can close this and make profit, I'll close that just to get buying power. We are at I don't know, I've got like 11,000 of margin buying power on here, so I'll use that for shares if GME starts going again in the pre-market or after hours in pre-market. And then covered calls, we'll do covered calls on our TD account here and on our Webull if I think we're just going to continue the cycle and this earnings is not going to cause a squeeze or some sort of covering and price action to the upside. So then we'll get back into doing covered calls. If it's in a downtrend like we've been in, I'll probably do like a 30 delta, selling a 30 delta call on the weekly and just rolling it down, as well as opening up puts. My price target on the puts would be, I'd have to look at this, but basically I'll just look at the timing on things. I'm putting a price target of about 43. But if we want to get more technical, we could just look at like this. That was a 65% move. That was a big one. I'm not sure if we're gonna do another big one like that, but that's a 28% move. That's a 57. So I'm just looking at support, and that 45 is such a strong support, it seems like. What do you know, at 60, 70%. So that would kind of be my price target when I put it in the option strat to see, you know, if it'd be a debit spread or just puts or maybe even credit spreads on the way down. Thanks guys for watching. We'll see you on Discord. Have a good afternoon. Peace out.